right. Thank you so much, Amy, and welcome to everybody to today's webinar. This is the second webinar in our nonprofit financial cycle series. So a quick note, we will have our third webinar in this series and final on May 19th, in which we will be going over presentation of external financial statements. So if you haven't already done so, please go out and register for that. And just a reminder, we do webinar series throughout the year, quarterly throughout the year. So you're getting topics that relate to the nonprofit industry on things that do impact them. It could be, this one is on financial statements. It could be cybersecurity. It could be all sorts of different things. So you can watch for those updates on our website under our nonprofit industry page. And there are prior recordings out there too, if there's a topic that you would like to re-listen to or listen to that maybe you didn't attend that live webinar. So we're going to go ahead and get started. This webinar, the first webinar in our series actually covered last month, strategy-based budgeting and organizational involvement in setting those budgets. So we went through conditional formatting in Excel to monitor budgets, and we discussed other third-party budget reporting software options. So in the webinar today, we will be going through an internal look at financials through operational changes that impacted all of us during the pandemic, which also impacted internal controls and even the financial statement reporting process. Jackie will be going through important key performer indicators for nonprofits and missional reporting with non-financial data that the organization is gathering. And then Dustin will be reviewing analytics in Excel and other dashboards that are utilized by nonprofits. And we will be wrapping up with a discussion on one solution that nonprofits have utilized and implemented to help with internal control features. So especially in this new virtual working world that we all live in. Okay, a look at who's speaking today. My name is Lisa Chafee. I'm a tax partner at Eide Bailly, and over my years with Eide Bailly, I've had the opportunity to work with nonprofit clients really since the beginning, so over 25 years ago. I also work with small business clients and individual clients in my office, in my market. And I work with traditional compliance work, and I do consulting projects. I've sat on the firm leadership team for nonprofit tax compliance, and I'm currently co-chairing the nonprofit business outsourcing and strategies team. So I personally sit on a few nonprofit boards, and I've volunteered for several different organizations. The missional side of nonprofits is very near and dear to me. Jackie Brooks will be our second speaker today, and Jackie is a member of our business outsourcing and strategies team. She helps our clients with strategic solutions to reach their goals, and she really does this by matching clients with new technology to help them with their specific business goals or nonprofit goals. She provides business leaders with accurate, timely, and easy to understand financial statements so leaders can do what they do best, their missional work. Overall, Jackie is known among our team as someone who takes the time to understand her clients, the business, the mission, their drivers, their processes, and really digs deep into what makes organizations tick. Our third speaker today will be Dustin Wheeler, and Dustin is a member of our Eide Bailly National Business Outsourcing and Strategies team. Dustin specializes in helping clients implement technologies that automate and enhance accounting systems, including expense management, accounts payable, workflow, reporting, business intelligence, and cash flow forecasting. Dustin's broad experience in tax, audit, and consulting helps him to identify innovative opportunities across service lines through collaboration with the right people. So they will be helping with our topics today. All right. When we talk about pivoting during the pandemic, all nonprofits really would be able to provide examples of processes and procedures that worked well and processes and procedures that needed immediate changes. Most nonprofits were impacted operationally, either through how they were delivering their service or providing products to their charitable class or to their members, or how their staff was working. So through all of the operational changes that were made, consideration for segregation of duties in this new virtual environment also needed to be considered, as well as how accounting systems were functioning. So Jackie is going to share an actual example with us of a client she works closely with, and they had to do that exact same thing that many of you on this webinar had to do as well. So I'd like Jackie to share a little bit about how this nonprofit actually had to change their service and how they had to update some of their internal processes and systems, both with positive outcomes.
Yeah, so this is just, basic overview of what they did, but I did have a client impacted quite a bit from the pandemic, where its main purpose includes bringing families of the rare disease community together with scientists. Physically, they would do that every year or every other year, and they came from all over the world. So obviously, during the pandemic, this physical connection was definitely lost. But the pandemic did create a unique opportunity for them to kind of reevaluate their why, especially during the pandemic. And their why their focus became narrowed to their families who were being hit very hard because they have medically fragile children and they weren't able to get the access to their normal medical supplies that they require on a daily basis. So my client pulled their resources together to get those supplies to their families. And then they extended their support by providing web-based online support groups on a continuous basis, almost weekly, rather than periodically and obviously in the flesh like they did before. As most nonprofits, at least when they're starting out or maybe even throughout their life, they're small. So segregation of duties and internal controls before the pandemic was already a struggle. However, once again, the pandemic created a unique opportunity for them to get reorganized and look for improvements. And one of the things that they did that helped not only during the pandemic, but even right now, was streamline its accounting functions. First, by converting its accounting software to a web-based platform that also was able to integrate with their donor software, as well as a bill pay software that has built-in controls where invoices can be approved and checks can be written, signed, and mailed out with just a touch of a few buttons. So it saved them time and has also left a better audit trail than even before. So even though the pandemic was hard, it actually created a lot of great changes for them.
Thank you, Jackie. I think that I think we all personally, professionally, organizationally have seen struggles, but there's also some positives that have come through reevaluation of all of those areas. I should mention that as we go through our webinar today, we are welcoming questions. You can use the Q&A button at the bottom of your screen. We will try to watch those as we go through between the three of us. And we also reserve some time at the end of the webinar today to go through as many questions as we can. If you use that Q&A function versus a chat function, it makes it a little easier for us to follow up if we don't get through all of the specific questions. All right, we're going to just key off of kind of Jackie's story. And, there's been a big push and many articles written really in the last several years about the importance of digital transformation during crisis. And really just even before the crisis, people were looking for better solutions of managing and operating their accounting departments. Standalone manual accounting systems likely also included paper processes and procedures. It became so much more difficult to control those and to utilize those during the pandemic over the last year. So it became less efficient and it just became more of a challenge. So if we move to that digital solution for accounting functions, it's a lot of organizations in the last 15 months had to have a real serious discussion internally if that was the right move for them. And it looks like probably based on the feedback on the first polling question that I would imagine some organizations got there really in the last year and a half based on the pandemic that we were all facing. So in addition to today's cloud-based solution for accounting and operations, There are hundreds of third-party apps that flow into cloud-based accounting systems to automate processes. And really through that automation, it does two things. It decreases the risk of errors and it increases efficiency. So examples of third-party apps that can be built into your cloud-based accounting solution or accounting systems would be bill paying apps, expense reporting apps, time tracking apps, and scheduling apps, payment receiving apps, payroll and HR apps, reporting and billing apps. Another area of efficiency with cloud-based accounting solutions is the ability to directly link those to credit card accounts or to bank statement accounts. So there's efficiencies really through recording transactions and reconciling transactions. And the beauty of this also is your data then becomes real-time data. And I think in today's operations with nonprofits, with businesses, is that real-time data has become so important to operations in making daily decisions. So most of these cloud-based accounting solutions, they have built-in dashboards that are accessible simply by viewing it on your mobile app, on your phone, on your iPad, or they have dashboards that can be built out of that accounting. And Dustin will go through a couple examples of those dashboards at the end of our time today. You know, when you transition from standalone accounting systems and paper processes, it can be challenging for organizations. So the move is not always super popular, but there are so many reasons to move in that direction, and really is probably at the end of the day a best solution and a best practice for a lot of the nonprofit organizations. Another interruption that many organizations faced was sending workforce members home. So could members of your organization continue to do their accounting daily duties in this new remote environment? And if so, were procedures developed that still safeguarded the integrity of data and accounting records? Giving too much control to one position to approve, record, and reconcile accounting transactions is risky for an organization. And we will talk more about that on the next slide when we go through internal controls and some examples of internal controls. Another hurdle nonprofit organizations had was keeping in touch with donors and event planning in a virtual environment. Many nonprofits saw significant decreases in donations during the spring and the summer of 2020. But by the end of 2020, charitable giving did increase overall from 2019 by 2%. And this was based on an analysis conducted by the Blackbaud Institute. Digital solutions were developed to accept donations and to conduct fundraising events. So those traditional efforts were quickly shifted to new fundraising techniques and development of no-show or virtual events. New revenue streams had to be developed because prior revenue streams were diminished or even had completely gone away based on where we were at as a country. Internal controls. So internal controls are needed, as mentioned earlier, to safeguard your assets and to safeguard the integrity of accounting information. Financial internal controls really have three fundamental areas. So documentation and following of procedures, safeguarding of assets, and dividing responsibilities among different people. When an organization is designing their internal controls, they need to consider all methods of which they are receiving resources, so receiving funding or grants, whatever resources they are receiving, how they are stewarding those resources, and then how they are spending those resources. So if procedures are weak in any of these areas and not enough people involved, there is a risk of misappropriation of funds or misuse of assets. Not saying that it happens in all cases, but the risk would still exist. Processes and procedures should be developed and communicated to everyone within the organization. So that everybody really understands what the expectation are. And some examples of this would be documentation of who has access to bank accounts and who is authorized to sign checks, whether that's written checks or now in today's world, digital. A written policy that requires cash to be locked in and to be deposited at the bank within a short period of time. Dual signatures on checks, which prevents one person really from having sole authority for spending resources. A written policy for expense reimbursement. And this can include receipt requirements and how fast or timely those receipts and requests for reimbursement have to be turned into an organization. A written policy for board approval of expenses over a certain amount, if those were not originally included in the budget at the beginning of the year that the board has already approved. A written policy to check out keys to an organization's vehicle or other asset use. A written policy requiring computers to be secure and locked when employees are away from their desks and stored in secure locations. A written policy separating the duties of the person that receives checks from the person that records income in the accounting system from the person that is depositing that income at the bank. And on the expense side, the separation for writing vendor checks or payroll checks should not be the same person that is signing the checks or the person distributing the checks. Now, again, in some of the solution that we're going to talk about today, there have been ways to automate this that helps organizations with their internal control safeguards. In the chart that we have here, this is an example really of a small nonprofit organization that has limited staff. So what we're trying to show in this chart is you really need to segregate the duties of approving transactions from recording those transactions and then reconciling or approving the reconciling of those transactions. And those are all good internal control safeguards. You would never think inside of a nonprofit that there could be theft or misuse, but it does exist. If you think your organization needs to have a review of your current internal controls, there are risk advisory services out there. If after you get through this, you go back, you talk to your management, and you think, we should probably take a look at this. You know, you can contact any of us on this webinar to get a little bit more information of what that process really looks like for a nonprofit organization. So if you look, the executive director really on this slide, they are the person that has the authority to approve invoices. They approve payroll. They would approve if overtime is needed. They are the ones that sign and they mail the checks. And they are the ones that typically would make that bank deposit. So there's a lot of the beginning of the process and on the backside of the process for this person, for this role. The accountant or the bookkeeper inside of a small nonprofit, they're the ones that are going to go into the accounting system. They will write the checks. They will often reconcile bank statements. They'll record receipt and disbursement of data in the general ledger, really, as they're the person that is in charge of the general ledger. They will often process the payroll. They'll process vendor invoices. They'll work with petty cash, and they do any adjusting journal entries that need to be made in the general ledger. And then often in those small organizations, they do have to pull a member from the board to help in this process to separate some of these duties. So that board treasurer often, sometimes they will, if you're on a cloud-based solution, they will do the bank reconciliation, or they'll receive a secondary copy of a bank statement and they'll just review all the transactions that go through it just for that accountability. And they will typically review general ledger detail on a monthly basis. One item that I should have mentioned too on that last slide with internal controls is if you're a nonprofit that receives federal funding at all, there are even heightened reasons to make sure your internal control processes are sound. Once your federal funding hits a certain level, there's audits that are required, which includes an audit of internal control. So just something to keep in mind as you know, nonprofits are out there looking for different types of grants. The federal funding does have different requirements, and you should be aware of what those are. Visit with your CPA or one of us, and we can get you to the right person on that part of it if you are receiving or hope to receive federal funding.
Lisa, I wonder if we can just take a moment here and address a question from
Sure.
Ricardo Cabrera in the chat. He is asking about, at some point, can you please ask about how to account for in-kind activity, income and expenses?
So from a GAAP standpoint, and again, I am a CPA. I sit on the tax side of the aisle, but I started my career with Ike Bailey on the audit side. And in-kind services or in-kind donations are typically still recorded on a grossed up method. So you would record that revenue as you received it, and you would record that expense as you received it inside of your general ledger. For tax reporting purposes, it's a little bit different. We call in-kind services a reconciling item. So on your Form 990, we do take off any in-kind services, and we don't on the tax side count that as revenue. So that is one difference between general ledger accounting and tax reporting for those in-kind donations. Great question.
Mm-hmm. Yeah, and he also wrote in the chat, we do not use checks, only debit cards. How do we protect this?
Well,
Jackie,
Dustin, do you have I'm sure there is a software solution for debit cards.
There sure is. Yeah, there now for those that are using say QuickBooks Online or Xero as their accounting software, there's a software that we use here called Receipt Bank that your employees can have this app on their phones and they can take pictures of their receipts, so they can be accountable for how they're spending the debit cards. You can require them to make sure they keep these receipts, and it's all easier if you do it online. If you have an app and take a picture of the receipt rather than trying to chase down the paper copies, that becomes quite a hassle. Receipt Bank is not the only app out there. We also use HubDoc in certain situations. Expensify is another program that does some similar things. So you do have a lot of options. So great question.
And as a former internal auditor at one point, debit cards are dangerous from an internal control standpoint. So just keep that in mind whenever you are choosing your purchasing methods for your employees. But there are other things out there, just like Dustin was talking about, that can help manage them. But they probably aren't the safest.
And I actually just realized that I am a little bit out of date here. Receipt Bank actually changed their name to Dext, D-E-X-T, this last month. So that if you want to look them up, that's the word you should search for.
all right. Thank you both, Dustin and Jackie, for input on that question. We're going to look at internal financial reporting now and the differences between management reporting and board reporting. So a written process for internal financial reporting should be part of your internal controls, and a timeline developed for how soon after month end should you really have those books closed and reports to management. As noted in the first webinar, the development of a budget includes individuals from multiple levels of the organization and multiple departments. So when you're going through reporting for monthly financial statements, you really do need to share out those budget to actual results with individuals that are responsible for certain budget line items or departments or cost centers of your nonprofit. That way they know in real time or slightly maybe a few weeks, 2 to 3 weeks after month end, if adjustments need to be made in operations at all. So as part of the financial reporting internally, the next section, Jackie's really going to go through some KPIs for nonprofits that are very valuable. So we will be discussing that next. And then at the end, again, Dustin's going to be going through dashboards that more nonprofits are starting to use to capture some of that non-financial data and financial data. So just our standard standalone monthly month-end close financial statements, there are more things that you can do to enhance the understanding of really what performance is happening inside of a nonprofit organization. Now on board reporting for a nonprofit, that board is typically carries that legal responsibility for the nonprofit. So in an employee-run organization, the board is used for oversight versus for daily operation management or financial review. If you're working with a volunteer-based organization like a soccer club, you parents get to get in there and have a vote on operations and have a look at the financials. we're going to focus more on the employee-run organization. The board should be involved in approving that annual budget. Again, we've spent time on that in the last section. And that process, though, for that budget development should happen months before the fiscal year begins. The board should be provided periodic reporting on the budget versus actual performance. They should be provided reporting on assets and on liabilities. If there is a desire of board members or a board member or a group of members from your board to dig really deeper into financial information, a solution that a lot of nonprofits have used is to form a subcommittee called the Finance Committee. Those committees do dig a little bit deeper into the finances. They work more with the accounting department or management and really are kind of a liaison to the board. And it does work really well. I've had the opportunities to sit on and currently do sit on a finance committee for a nonprofit. The other thing the board should also be doing on an annual basis is reviewing and approving the Form 990. Again, that tax return is open to public inspection and people are looking those up. Anybody can see anybody's nonprofit return that's in the United States. So you want to make sure as a board of directors that the information that's being reported is financially sound and is representative of the programs that the nonprofit is conducting. All right, this is probably going to be the most popular slide for today. Actually, I'm kidding. This is probably one of the most common pain points of accounting in a nonprofit is the allocation of functional expenses for financial statement purposes. And that includes payroll, benefit allocation. So with nonprofit financial statement reporting, there are 3 classes of functional expenses. So you've got your program expenses, and in many times there's multiple programs that a nonprofit carries out. So you could have multiple programs. Then you have management and general expenses, and you have fundraising expenses. If expenses are directly related to only one of those categories, then you can use a direct cost method of allocating that expense. And so an example of that might be if you're a nonprofit that provides food to children or to low-income individuals, that food expense is a direct cost of a program, and so does not have to be spread throughout multiple programs or multiple functions of expense. So you can use that direct cost allocation. If an expense is not attributable to only one expense classification, then it should be the indirect cost allocation should be used. And a common example of this, again, would be payroll and benefit expenses. So if you have staff within your nonprofit that are program people and they run your programs, most of the time, those people can be allocated to that program or to that activity. If you have an executive director that wears several hats, part of their time might be for program A, part of their time might be for program B, part of it might obviously be for management in general, and they might be involved in fundraising. So you have to come up with a method that allocates that position or that person or group of people to different program or expense classification, and that's called the indirect cost allocation. In addition to maintaining proper functional expense classifications for organizations, many organizations that receive grants also have to track expenditures for that specific grant. So there are accounting systems that will track this now through an app or even through the building of a dashboard. So there's a lot of ways to make this process that maybe in the old school was kind of a hassle. With technology today, there are easier ways to get data built and really more efficiently to your nonprofit or to your board. A best practice in this area for nonprofits is to address the allocation of expenses when they are incurred instead of doing a study at the end of the fiscal year, so that your financial records, your cost centers, or your programs are accurate throughout the entire year. So we will go through a couple examples on this slide of methods of allocation. So there are various methods that can be used for indirect cost allocations. The biggest things are to be consistent and to be reasonable. So a couple examples would include payroll costs. So expenses that are directly related to the number of individuals maybe within a program or a department. you can use that to allocate other expenses. For example, if you have an IT department that supports the entire nonprofit as a whole, and I have 17 staff members in this program, 17 in this program, 5 in this department, you can use that payroll allocation as a means to allocate other expenses to spread those across programs or classifications. The time or effort allocation method, and we discussed this a bit on the last slide with that executive director's time. You can do a time study as long as it's reasonable and consistent and allocate payroll across the appropriate functional expenses or programs or grants, however you're tracking that. And if that person's role or focus really doesn't change throughout the year, you can use that method. But if you have staff that are reshifting their focus, maybe there's a new activity that started, or they have to shift their time between multiple things, you really should be doing a time tracking per pay period so that that gets allocated as you're going, as those payroll periods are happening and payroll is being processed. It makes it a lot easier to monitor how you're spending your grants or how your programs are performing, really, when you do that per payroll. And then a third example of an indirect cost method of allocating expenses would be by square footage. Oftentimes, utilities and maintenance expenses are allocated to programs or to different classes of the functional expenses based on the square footage that they use inside of a facility. And as you can see in this area of functional expenses, methods of allocating, it really is a bit of a science to allocate those expenses. But in turn, it really does provide more accurate, more timely internal financial reporting.
So I wanted to start this part of the webinar with this quote by William Bruce Cameron, and I think Albert Einstein's given credit for it as well, but not everything that can be counted counts, and not everything that counts can be counted. I think that this quote really captures the challenges we sometimes face when we're creating useful performance measures for an organization. And honestly, sometimes it's just too easy and convenient to just grab those easy to reach data and just come up with some standard measures and look at them. But sometimes those measures really may not be what truly counts to your organization. We can count our numbers all day, but if they aren't driving your daily decisions and actions, then they probably aren't crucial to your mission and overall vision. So over the next few slides, I'd like to introduce you to what key performance indicators are and why they are important, and then briefly walk you through how to create your own KPIs, and then give you some ideas for both financial and non-financial KPIs. So the definition of a key performance indicator is a quantifiable measure used to evaluate the success of an organization, employee, etc., in meeting objectives for performance. So KPIs are important. It's an important tool to use because they can influence management and employee behavior and just the overall culture of your organization. They really help align your operations to your mission and strategies. So if you attended our March webinar about budgeting for nonprofits, you know that we really emphasized focusing your budgets on your mission and strategies. Well, this is also true when you're looking at key metrics. So in order to begin the process, you first want to look at your mission statement, read it over and over again, and take from there some key areas and write those down. And then on top of that, if you have them, review your vision and your strategic plans and do the same thing. So from there, you will then define some goals for each of those areas. Because without these goals, we really won't be able to determine a useful KPI. So those first steps are crucial in this process, but you're not done yet. Now you need to choose a few KPIs for each goal. I would say the fewer the better, because they're probably going to be more meaningful and useful if you focus on a few. So I'll go over some financial and non-financial ones in this next slide, but I do want to stress to you that it is really up to your own organization and your own unique mission to decide which metrics are the right ones for you. And then I also wanted to point out that KPIs are only telling part of the story. As the name tells you, it is an indicator. It means it's only a partial measure of something. So when you look at each area of KPIs, any set of these are incomplete without the others. So you need the full picture when you're looking at them. And then you need to also make sure you're checking for links between them and see how they impact each other. And then also, as the name suggests, KPIs may indicate there could be some operational issues developing that are in need of attention. So we'll move on to these examples. So let's see, here are some examples. Now, like I said, these are just examples. You need to decide what is going to be best for your mission, your vision, and your plans, but I've separated them out. And obviously financial KPIs are driven directly from the data within your financial statements. And then the non-financial KPIs are based off of activity from data outside of your financials. So in the interest of time, I'm going to pick some of my favorites. I'll kind of summarize these, but donation growth rate, that's pretty simple. You just are comparing donations from period to period and setting goals if that's critical to you at the time. Net fundraising and public support, that's pretty simple. If you just have some really specific fundraising goals, you can look at your growth from month to month or event to event, from year to year, but look at it from a net perspective, considering those costs so that you can capture the full picture. But the next one, the fundraising ROI, the return on investment, I like this one because it's a neat way to look at the number of dollars coming in compared to the costs in a ratio format. So you would just take the, let's see. Oh, before I go on that, I did want to say that you can take this further. So you can dig this down further and calculate the cost to gain a donor here too. So you would need to be able to track and separate any new donors, maybe even per advertising outlet like Facebook. If you advertise for a specific campaign, Facebook tracks that, and you can take the cost for the Facebook ads and divide them by your new donors received through that campaign. So that's kind of a neat way to look at your fundraisers. Grant secured, that's a pretty basic measurement. If fundraising through grants is a specific strategy of yours, you can track that and then even break it down further into grant types and goals for each of those. Administrative efficiency, this is one that I like to use a lot. I think it tells a really good story, but this is really only useful if you've adequately allocated certain costs to each function, like Lisa was discussing earlier. But once you've done this and you've determined that your administrative function should, let's say, maybe really only be 15% of your resources, you can monitor those monthly. So you would take your total admin support and divide it by your total expenses. And then on the other side of that is the program efficiency. So that's a good measure to evaluate how efficient you're carrying out your mission. So for this, you would take your program service cost and divide by total expenses. And I think a good goal for this would be between 75 and 80%. This next ratio is my favorite. It's the defensive interval ratio, or I like to call it the survival ratio. So this measures the number of days your organization can continue to operate with no additional revenue sources. You can calculate this by taking just the simple cash divided by your operational expenses, and then dividing again by 365 days. So I do modify this for my clients, especially if the organization has restricted cash that we need to consider, or restricted net assets, or even grant payout commitments that haven't happened yet in the current year. So I factor those in as well. So this will give you a great indication of how healthy your organization is with respect to cash reserves. The next one is liquid unrestricted net assets. Basically, it's just monitoring the level of unrestricted net assets from month to month, quarter to quarter, however often you think. This will definitely help protect you if you're monitoring it during downturns, or will also help you plan to pursue new opportunities if you have a good level there. And then we have the quick ratio and the debt ratio. Those are, some just standard ones, but they're good ones if you carry some debt, or if maybe you have some liquidity problems, to monitor those. But what I really wanted to kind of cover in more detail were these non-financial KPIs. And these are just examples. And again, what you use is going to be based off of your mission and not necessarily these, but this should get you started brainstorming. The first one is donor growth. It is similar to donation growth, but it's measuring the actual change in donors. So if you have a good donor management system, you could even take this further by tracking them into categories like new donors, recurring donors, and even lapsed donors. So using this metric with actual donation amounts could help you identify where those funds are coming from, or even if it's time to nurture those lapsed donor relationships, because maybe the new donors aren't picking up the losses of the lapsed ones. And with that is the donor retention rate. So this is a good one to use in conjunction with your donor growth. So this focuses on your recurring donor relationships. These are going to be your most cost-effective donor, because it costs less to keep existing donors versus trying to find new ones. So if your donor growth was an increase of 100 donors, that might seem good at the time, but then when you consider that with a lower donor retention rate, then we really aren't as successful as we thought. So consider using that. This next one is website page views. This is neat. So this is more marketing focused and refers to the number of times users viewed a page on your website. So you can assume that the higher the number of people that visit your website, the higher number of people who will click through and perform an action like donate or reach out to receive your services. So it's neat to monitor that. And then there's also the landing page conversion rate. And that's another marketing metric. And that shows you how many visits were made to your donation page and that actually completed the donation process. So you can use Google Analytics to track how individuals arrive at certain pages and modify your marketing efforts towards those findings. Then there's number of patrons served. This is just a standard, simple, yet effective metric to just kind of see the level of service you're providing. Again, if you can break this data into certain things like even days of the week, if you provide daily services, or even times, you might see that the times that you're busiest and where all your resources aren't what you originally thought, and you can kind of start managing your days and the people that are there and volunteers that way. The next is program attendance. So this is a metric that could be used in conjunction with the Net Promoter Score and the pre-cost scores, which are listed below, and we'll talk about those. But this is just a simple tracking of the number of attendees for each service. But keep in mind, just because program attendance goes up, that doesn't necessarily mean your attendees have actually benefited. So that's where the Net Promoter Score and these other ones come into play. So The Net Promoter Score measures the satisfaction of your attendees. So you can even use this when measuring employees or volunteer satisfaction. It's a really neat metric. And this just asks attendees to rate something from a scale of 1 to 5 or 1 to 10, how likely they would be to refer a friend or family to this event, webinar, all those, whatever you're doing for them. Another metric to measure the benefits provided to your patrons are pre and post scores. So this may not be relevant to all of you, but you could consider it, especially if it could end up being essential to measuring the changes in knowledge, skills, abilities, or even the behavior of your patrons. You can see if they're actually learning something or getting something out of your service. So you would provide them with a questionnaire of some sort before the program starts, and then one after, and then you'll be able to see. And then finally, we have a volunteer metric. For many organizations, volunteers are the backbones. So ensuring they're satisfied and being able to retain them is maybe crucial. So you could use the Net Promoter Score to measure their satisfaction. You could measure a volunteer retention rate, which is similar to the donor retention rate. And so that would be a good thing. And then this next slide, I wanted to show you, this is a real life example from a client of mine based on their mission and their vision. So I took some examples from the Global Foundation for Paroxysmal Disorders' scorecard, and I listed them here. So as you can see, not all of these are things that came from the previous slide, maybe just 1 or 2. They're unique to their mission. And some of these are simply measured with a yes or no. For example, in research, as anyone in the research community would know, research is slow. So any goals and measures related to this area just may be as simple as, did we get this done by the end of the year or not? Yes or no. So I just wanted to share these unique areas and measures with you, and thank you to the Global Foundation for Paroxysmal Disorders for allowing me to share this helpful information. I've also included at the bottom something that I thought was neat that is on their website and can be used to show your donors or patrons progress towards meeting your goals. It's a dashboard type tool. So if you want to check it out yourself, I've included their website at the bottom as well. So now I will hand it off to Dustin.
Okay, well, thanks, Jackie. Just a reminder, everybody, if you have a question, put that in the Q&A. There's a button there at the bottom for Q&A. Type that question in. We may have a couple of minutes at the very end to address those. And if we don't get to them in today's webinar, then we'll contact you afterwards. So please put your questions in there. And I'm going to go through my slides very quickly. We don't have much time left, but looking at this picture right here, you may be thinking of your summer road trips. Maybe you've got a vacation planned. Well, imagine taking your road trip and only being able to look in the rear view mirror. Well, you might see your kids sleeping. You might see that you're off road. You might see that you run over some street signs. But the truth is, you're just downright lucky if you make it to your destination, right? So often in accounting, we often look at where we've been in the rearview mirror. And what I mean by that is we work off financial statements that may be months old or a year old by the time we close the books. And I don't think financial statements are going away. I think lenders and government agencies are always going to require those. But what's more important than where we've been is where we are now and where we are going. So your car has a dashboard on it with lots of information, and you might call these the key performance indicators of your driving. So you can see what your speed is, you can see how much gas you have left. And this information is vital in getting you to your destination safe. And when we talk about dashboards in accounting, they're very similar. They give you a quick visual understanding of your nonprofit's key performance indicators in real time.
So Dustin, there was a question in the chat that I accidentally hit. We would answer live, so I'm going to go ahead and answer it. Corey asked, what is the difference between allocating IT expenses and finance expenses? I've been told finance expenses cannot be allocated to the programs because they're needed regardless. Thanks. Yes, so I believe accounting related expenses stay in G&A and are not allocated.
So with so many people here using Excel, I just want to share some Excel tips on how you can make this a better visual just right here within Excel. So one example here is, and I talked about this in the last webinar with conditional formatting. I want to share a different aspect of conditional formatting today, and that is what you see right here, the data bars. You've got a few different options, and what I've done here is I've done a gradient fill for the different numbers that you see inside of the spreadsheet. So under income, I've got those green. It's a green gradient fill, so you can see what percentage of people, or kind of proportionally what number of income is coming from these different sources. And then for your expenses, you can see that bar graph as well. How much are we spending on these different things relative to each other? And you've got a bunch of different options on there. You hit more rules, you've got a bunch of different colors and different options for how those numbers work. Another one here is you can do icon sets right here in Excel. So you'll notice on here, I've created these rules here on the right that if it's within a certain number, I want this icon, a yellow exclamation point, a green check mark, a red X to appear in next to these different numbers. Maybe the number's too high, maybe the number's too low, whatever it is. These icons just give you a discussion point, like, oh, hey, this needs to be addressed in our meeting. So it'll call out attention to these numbers. So just a couple of Excel tips for those of you using Excel. You can improve the way that you're using it, make it more like a dashboard. Now, one solution I'd like to share today is called FATHOM, and this is a dashboard and reporting tool that we use with many of our small and medium-sized nonprofits. So FATHOM integrates with QuickBooks Online and QuickBooks Desktop they pull in the financial data from those programs, as well as Xero, which starts with an X, as well as MYOB. So pulls from those accounting softwares. And if you're not on those platforms, you can import from Excel. Even though it may not be quite as convenient to get your data in. But and while this program can do a few different things, it can track key performance indicators on a monthly basis and compare those numbers to targets and trends. As you can see on the top of the slide, it can also produce visualizations that can help analyze financial statements. You can see that here on the bottom. And here's another screenshot of FATHOM. This one is showing a cash flow statement. So the bars in green going to the right are cash inflows that are positively impacting cash flow. The bars in red going to the left are the cash outflows negatively impacting the cash flow. So I've sat in many meetings over the years, and people look at a traditional paper cash flow statement, and it can be very hard to understand, kind of like a puzzle. And when you have a visual like this on your screen, it's much easier to explain things like what factors are having an effect on cash flow, and explaining why accrual net income differs from cash net income. Now, I'm not sharing this to try to sell you on FATHOM, because there's a lot of software out there that can do very similar things. We talked about Giraffe in last month's webinar. QVinci is another one that does similar things. But my intention of showing this, though, is that I think there's a lot of value in having a report that's understandable, especially for non-financial people. And in Ide Bailey's Business Outsourcing and Strategy Department, we not only do the compliance work of keeping books up to date, but we also use these technologies to provide meaningful reports and tell the story of how a nonprofit is performing. Example here on the screen, if you're a large nonprofit using an ERP like NetSuite, Sage Intacct, Blackbaud, there's many others of those. And a lot of these have built-in dashboards. And here's an example of NetSuite, where you can see a summary of key performance indicators, which includes the grant revenue, the pipeline, opportunities. So what's great about these dashboards and the ERPs is that you can move these portlets around between the middle and the side, and you can customize this to look how you want. You can also make it so that only certain individuals can see this data. So the dashboards are customized by role. They see what's only pertinent to them, and maybe sensitive data those people don't have access to and can't see that information on a dashboard. So these dashboards tend to be relatively easy to set up with a little bit of training, but expect most of the time to be spent deciding what data is the most important for a user and how you want to visualize that data.
Hey, Dustin,
mhm.
Just real quick, in case anyone has to drop off, please go ahead and answer the last polling question. And Dustin, you can continue on.
Okay, great. And I will be done very quickly, but just what right here is a analytics example of what our data analytics team does. They'll use technologies like Microsoft Power BI, Tableau, and Alteryx, and so they can make these very customizable, very data, large data type of dashboards, and they can connect to all kinds of software and databases. So what I showed before, NetSuite, FATHOM, those are maybe a little more limited in what you can put in. Your possibilities are pretty endless with what our data analytics group can do. So anyway, if this interests you, I encourage you to sign up for our nonprofit webinar next month. We're going to be discussing a little bit more about dashboards and how you might want to use these to externally report your financials. And this stuff will be explained a little bit more in detail. One more thing here. That Lisa talked about internal controls and that we use software for internal controls. And we use this software right here called bill.com. And this is a software that can manage your accounts payable. You can receive your bills to pay in a paperless format. You can organize them, pay those electronically, either by check or ACH or other payment means. But what's great about those, it segregates out your duties, and you can have people approve transactions either through a phone app or through the website. And anyway, the past year here with the pandemic, we've seen an increase of usage of this technology as nonprofit heads and accountants are working remotely and need to get bills paid without passing paper around. So what we do in the business outsourcing and strategy department, where we do the accounting for our clients, we use this software so we can help our clients pay their bills. And of course, our clients need to approve them before they can be paid, but we're handling all of the administrative side of that with the organizations and the workflow of getting all these bills paid. So we had this last polling questions. I don't know if I saw the results, but if you're interested in some of these solutions, we'd be happy to talk to you and reach out to you. So with that, I think we've run out of time, so I think we'll end here unless Lisa, do you have any closing thoughts before we close?
No, I just want to thank everybody for attending again today, and it's great to see some additional development in the KPIs for nonprofits specific to this industry and solutions for reporting that are, in addition to the traditional financial statement reporting. So thank you both to Dustin and Jackie for joining us today and going in a little bit deeper on both of those topics. And please join us again for our May 19th webinar, as we'll be talking about external financial statement reporting. And keep a close eye on our website for the summer webinar series for nonprofits. Thank you, everybody, for attending.